Good morning. It's Thursday, March 13th, 2025. Zach Howard here. Here's your 3-minute morning market update. That's from my notebook this morning. First up, disinflation. Continuing to be that playing out as we have now today. PPI data further confirming what we've seen in the US CPI data yesterday. Following growth, following inflation now accelerating. Big drop off in the core PPI. Month over month came in actually negative 0.1% versus a forecast of a positive 0.3%, and a big deceleration from the previous month of 0.5 back in January. PPI usually is a leading indicator of where CPI will be in the months ahead. So continuing to support the data out there. I am following the data as Ayn Rand up in the back there, Atlas Shrugged, one of my favorite books, would tell us A is A, math is math. In the financial media, we continually hear narratives around price action and how markets move. When if you look at the data, look at the math, it's a much better approach. Most people don't want to do that because it actually involves work. But if you want to get better at anything, you need to put in the work. Further to the disinflationary backdrop, if you look at the signals, such as yields, such as gold, such as falling oil, all continue to play out disinflation as the backdrop. Gold loves disinflation, continues to show higher lows, higher highs into a bullish trend of all-time highs in fiat money prices. Gold's little brother, silver, often known as a precious metal, to me is more of an industrial metal. It acts like a precious metal in monetary debt monetization, accelerated times, debt debasement, fiat debasement. We are starting to see that as a front-running indicator of what's to come with more debasement globally. Silver continues to show strength, higher lows, higher highs. If silver really accelerates to this $34, $35 an ounce level in the US, it could massively increase relative to the ratio of gold to silver. One thing that is not like gold is Bitcoin. Often confused and say it's digital gold. Not so much. Gold has a volatility 1/4 the percentage of what Bitcoin is. So gold acts like a currency, Bitcoin acts like a commodity. Further to Bitcoin, it continues to put up lower lows, lower highs in a bearish trend following that gold to Bitcoin ratio. Bitcoin to gold ratio continues to fall, now down to 28, continues to drop, is a signal that I'm paying attention to. Michael Saylor can continue to leverage up his company to buy more Bitcoin, but that is not going to change the fact that Bitcoin doesn't really act as well in a disinflationary environment as it does in an inflationary environment. So unless that macro regime changes, I see potentially that Bitcoin continues to be under pressure. That's what I got on my notebook this morning. Once again, watch the next play, looking at the data, trying to get better. That's what the game's all about. That's what I try to do every day with my notebook. Have a great day. See you tomorrow.